Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. Good Saturday morning to you. That's right. I am Mark Eitel, host of the Mr. Mortgage Show, and I do put the fun in funding. I love that intro. But yes, Mark Eitel here. This is the Mr. Mortgage Show. We do this every Saturday, same time, same channel, and then 24/7 on the podcast network. So we are getting more and more podcast listeners, which is super cool. So anywhere you listen to podcasts, you can now find the Mr. Mortgage Show, obviously on the iHeart app. But if you use a different platform, we're there too. So anytime you want to hear replays of the show, just Google the Mr. Mortgage Show or visit themrmortgageshow.com, and we are there. So super excited about that. But yeah, we are happy to be here. It's a gorgeous day, gorgeous Saturday. I hope everybody's got some big plans after the show. Hang in there with us for a little while. We're going to have some fun this week. But again, Mark Eitel here, host of the Mr. Mortgage Show. And always we tend to start the show with kind of the mortgage and real estate news of the week. But before we do that, I want to share a story that just happened to me this morning. It was kind of funny. My ego got the better of me. So on my way into the studio where Dom, my producer, and I do this little mortgage mashup each Saturday, I typically stop for a cup of coffee or occasionally a Monster if I had a long night. I need some caffeine to get rolling. And this morning was no exception. And the cashier at the convenience store has gotten to know me over the last several weeks and calls me Mr. Mortgage, which is awesome for the ego. But there was a woman, and I'm assuming her daughter, young girl in front of her in line, in front of me rather, in line at the convenience store. And I was buying a Monster because it was a long night last night. And we were all talking, the cashier, me, and the woman, and the daughter. And he got it, hey, Mr. Mortgage, have a great show. And she said, show, the mother. And I said, yeah, I'm on my way to the studio. We do a radio show. And she said, oh, that's kind of cool. And the conversation continued. And she got her cell phone out and she said, do you mind? And I thought she wanted a photograph with Mr. Mortgage. I thought it was selfie time. So, I'm fixing my hair and kind of leaning in. And she says, no, I don't want a picture of you. Will you take a picture of me and my daughter? So anyway, my ego got the better of me. I thought I was recognized for a moment for the show. So I thought I'd share that. Sometimes that funny stuff is a good way to get the day started. But yeah, she didn't want a photograph of me. She wanted me to take a picture of she and her daughter. So anyway, Mr. Mortgage is not as famous as I thought. Well, at least not outside of that convenience store. So anyway, I hope everybody had a great week. I know it was a challenging week in the news for real estate and mortgage related topics. We are in an interest rate environment that continues to experience upward pressure. If you've been following any of the news articles that we produce over the last year or so, or listener to this show, it's no surprise to you. We've been talking about this for a long time, and honestly, it's long overdue. It's just, I don't think anybody's concerned about where we are. It's how fast we got here, I think, is what has everybody just kind of reeling, if you will. So I just wanted to get that out of the way. Interest rates are, as we've talked about for a long time, they're in this range and they're going to stay here for a while. And, they'll move in quarter point increments, maybe up and down throughout the cycle. Federal Reserve is intent on raising the overnight rate. By the balance sheet reduction, we're experiencing some mortgage interest rate pressures there, more so than the actual overnight rate being raised. So anyway, it's not bad news. It's just the news. So 30-year mortgage rates, I would expect to remain in this 4.5% to 5.5% interest rate range wherever you land based on your program. You're going to probably be somewhere in there. And it's still a great time to buy real estate. We talked a little bit about it last week, and I had some interesting conversations after the show because I don't you may remember we talked about bamboo toilet paper, the pandemic, and supply and demand. And I kind of weaved a story about all of those as an example of what is actually controlling the home valuations that we're seeing. It's supply and demand more so than the cost of money. Now, if money continues to become more expensive, there's going to be less buy-side demand, and and May is the operative word here, put a little bit of pressure on the market, but there still is far more demand to buy than sell. So that's what most economists are hanging their hat on, signaling that the home values are most likely going to stay in place and continue to appreciate, albeit at a slower pace. I've been calling for a 6 to 9% appreciation rate for months now. So eventually we'll get there and I'll be right. And I'll be able to say, I told you so 6 months ago, but it's going to take some time. We're already starting to see it slow a bit. But by no means do I think we're headed for the quote unquote crash. And we can talk about that. If you have questions about that, shoot them in. I don't know if that's a topic of conversation that people want to cover. I'm happy to dive in. I got into the mortgage business originally in 1999. So I've seen a lot. I've been through some cycles. I think I've got some valuable insight on, where we are and what's similar about this market and what's different. And maybe in all that, there's some answers to some questions that may help you. But happy to dive into that. Just shoot us a question if you have one regarding that topic. Otherwise, I'm not going to bore you with it. I would focus on supply and demand and not the actual cost of money when trying to predict a downturn. And nobody's been right in predicting downturns or slowing housing markets anytime in the near past. So I think, we just have to see where we go from here. It's still a wonderful opportunity to buy when you look at the cost of buying versus renting. Actually, you know what? I have started to produce a piece, and it's going out on the Facebook page and on the Mr. Mortgage Show YouTube channel. And we're going to start doing it daily. And we did one on Thursday, which was focused on looking at your budget instead of your interest rate. And we used an example, and I'll give you a very brief summary here. If it's at all of interest to you, check it out on the Facebook page or on the YouTube channel. But I used a very recent real world example of a client who called me during the week this week and said, hey, I'm just going to sit this out. The interest rates are scaring me. Home prices are scaring me. I just feel like, this isn't the right time for me. And I get it. There's a lot of pressure on home buyers. It's a scary time right now. Nobody ever wants to buy something at the peak and then see it lose value. And I use the example. They're currently renting a house, right? They're renting a 3-bedroom, 2-bath house, and they're paying $2,500 a month. But the neighborhood they want to move to, rents are about $3,000 a month. And I'm not going to go into the story because it's lengthy, but it's all spelled out in that video that's on the Facebook page and on the YouTube channel. But basically, we looked at an FHA loan, 3.5% down payment at today's interest rate, real interest rates, not, what he was approved for 6 months ago. And he can still buy a 3-bedroom, 2-bath house with a 2-car garage, exactly what he wants. And he's going to be into the deal with a monthly payment of under $2,500 a month. So in that instance, he can go into that neighborhood and rent for $3,000, or he can buy for $2,500. So that's what I mean when I say focus on your budget, not your interest rate, because here's a guy who thought this makes a lot of sense for me at 3.5%. I want to go be a homeowner. I see the long-term value in building equity. This is the neighborhood I want to raise my family in. And also, too, I don't know if I mentioned, they have young kids, so they're going to be in that house for a while because they picked it because of the school district. So they're going to be there for at least the next 10 years if all their plans go as they imagine they will. If it made sense for him at 3.5%, it still makes sense at 4.5%. And that's where I'm going with this conversation with budget, because he saw the headlines that say interest rates soaring, buyers are getting priced out of the market. It's, we're creating a generation of renters. He's reading all those headlines, and for him, he needed to have a conversation to help digest all that into real math and real numbers. So that's where I'm going with that. Focus on budget, not rate, and just keep your plans moving forward. It still makes sense for a lot of people in this market. And if you have questions, give us a shout. The Anytime hotline is 561-291-8569. That's 561-291-8569. Or visit the website, www.mr.mortgage. That's mr.mortgage. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
That's right. We are back. My name is Mark Eitel. I host the Mr. Mortgage Show every Saturday morning. Same bat time, same bat channel. And thank you so much for joining us. And yeah, shoot us your questions. Call or text with your questions. Dom, my producer, is here. He's on the board. He's got the phone in his hand. This man makes things happen behind the scenes. So he will be happy to get your questions on the air for you. So shoot them to us via text or call 561-291-8569. That's the Anytime hotline, 561-291-8569. Or you can visit the website, www.mr.mortgage. Hit the Contact Us button, and there you can shoot your questions to us also via the web. So we are going to dive into questions. Speaking of questions, I know Dom is giving me the finger, or the signal rather, that we've got one teed up. So, hey, Dom, what do we have?
All right. We have Jay sent in this question. It's a two-part question. Jay is asking, what's the minimum down payment on a fourplex? I want to live in one and rent out the other 3 units. Can I count the additional rent as income?
Hey, Jay, that's a great question. So you answered the question I was going to ask you back with the second part of that. So here's the really cool thing with buying a fourplex if you intend on occupying one of the units. And this applies for a duplex and a triplex also. So anything from 1 to 4 units, we can underwrite, and any lender can underwrite as a primary residence if you're going to truly live in one of the units as your primary, which means for you, awesome news. With an FHA loan, you can buy a fourplex with as little as 3.5% down. And with a conventional loan, there are programs from 3% to 5 and 10% down. So it's a super cool idea in this environment because people are saying, and I don't remember where I heard this story, but it was long ago. As I mentioned in the first segment, I've been in the mortgage and real estate business for a long time. And somebody long ago shared with me, if you can't afford a house in this market, buy two. And I never understood what that meant. And finally, I asked him because he was, pretty adamant about that. And he said, if you can buy a duplex, you can use the rental income to qualify, and you're going to reduce your monthly expenses, and you're going to have 2 units appreciating in this market. So that's the answer to your second question. Yes, you can use the rental income to help you qualify for that purchase. So great idea in this market, because as we talk about all the time, we reference the Zumper report. Rental rates are